How's it going, QTC? I'm back, and in today's video I will show you guys exactly how to find big moves before they happen. I'm going to show you the secret to using decision areas and asset correlation to find 100, even 200 pip moves before they happen. I've been consistently using these decision areas to catch insane plays, and today I will show you exactly how I do it on a day-to-day basis live on YouTube. And so if you didn't know, I live stream New York session every single day, proving my concepts to you and showing the trades that I take live. And the reason for me making this video today is because a lot of you guys focus only on the lower time frames. Like if you play one of my plays, the compensation play or the no-wick play, you focus on the 30, the 15-minute time frame. But those time frames don't mean shit if you don't understand the bigger time frames. If you don't understand the larger moves in the market. Because essentially what moves the market is the higher time frame. The higher the time frame, the stronger it is. That's why this video is meant to make you a more complete trader, understanding the higher time frame correlations so you can play the lower time frames even better. But yeah, boys, let's not waste any more of your time and let's get right onto the charts. Beautiful charts. So before we get into the video, a lot of you guys have been leaving me messages asking me, Bar, do you trade negative RR? And the answer is simply no. None of my plays that I have in my playbook promote negative RR. They actually promote either 1-to-1 or positive RR. So yeah, just wanted to get that out of the way because I hate when people say, Bar, you trade negative RR, blah, blah. No, I used to trade negative RR, but then I recovered. And now I'm a better trader because of it. But yeah, none of my plays promote negative RR, so don't be afraid. The playbook link is in the bio if you want to get the playbook. I have 4 plays, all over 85% win rate, and they are 1-to-1 RR. So go get the playbook. Other than that, let's get right into the video. So what are decision areas? Very simple. In a nutshell, decision areas are areas where price makes a hasty/big decision, either a push or a dump. That's exactly how simple it is. It is key levels, as you guys like to call it. So you've probably heard key levels on some Instagram video talking about trading. You've heard about key levels this, key levels that. That's simply what decision areas is. Now I'm gonna go over how to find decision areas, but after that we're also gonna go over something called asset to DXY correlation. That's also what. Well, let me see if correlation is spelled right. Okay, asset to DXY correlation. That's also one very important. That's a little advanced actually. A lot of people don't know about this. So we'll also go over that, and that will be some secret fucking sauce. So stay tuned to the end of the video because that sauce will be something no other trader on the internet teaches you guys. But anyways, let's get right into it. What is decision area? So before we start and get into the meat of this video, let's first make a quick run through of what a decision area is. So what is a decision area? A decision area is a specific price zone where the market makes a decisive move, either upward or downwards, often with considerable momentum. These areas are like checkpoints where the market pauses before determining its next direction. Characteristics of decision areas. Rapid movements. Price tends to move quickly and significantly when it reaches a decision area. Clear rejections or pumps. These areas are marked by strong rejections or pumps with little to no consolidation. Market gravitation. The price gravitates towards these areas before making its next move. Importance of a decision area. A decision area are critical because they help traders anticipate where the market is likely to move next. Identifying decision areas. To effectively identify decision areas, follow these steps, and that's what we're going to get into right now. All right, so the first step is examine historical data. So before you do anything else, what you need to do is zoom out like this, right? You want to have a broader view of price action. You want to see what has happened across a longer time frame. And then after you do this, you just look for areas where price, again, has made a hasty decision with little to no consolidation. So either a big move upwards or big move downwards, right? Either a push or a dump. So then we look here. All right, let's see. Let's mark up some places where we have a lot of movement. Oh, I think we found it. Right there we have a big dump, or right there we have a big rejection. Then we have a big dump at the same area. Then we have a big rejection, a big pump, big rejection. Okay, so it seems like we have found our first decision area, guys. Found our first decision area. So now all we do is we take this rectangle right here and we mark that up. Boom. There we go. Now we have marked up our decision area. Make sure the decision area isn't too big. You want it to be around maybe 50 to 60 pips. You don't want it to be massive, but you also don't want it to be too small because then you'll get faked out. So make sure the decision area is around 50 to 60 pips. Perfect. If you're wondering about the settings of my rectangle, here they are. Pause the video and you can just copy everything here. So the background is not complete Michael Jackson, but it's a grayish tone with opacity of 20%, and then you just extend right, extend left to make it go all the way to either side. But yeah, there we found our first decision area. Now let's go back and see here. So as you can see, guys, respecting. Look at that. Pump hard, dump hard, pump hard. And then rejected, dumped hard. Right? Whichever way it goes. It doesn't matter if it goes up or down. It doesn't matter if it breaks it or rejects off of it. At least whenever you tap this area, you see a big, strong move. Right? So right here, you have a big, strong move. Dumped. Pumped. No. Rejected. Dumped. Pumped through. Dumped through. Rejected. Same thing will go here. Pumped through. Pumped through. Pump through, pump through. Right? So you either pump through it or you reject through it. We don't care if it pumps or rejects. All we care about is we want to know where price is likely to go. Because what does this mean? What are decision areas essentially? Again, decision areas are markets. There's checkpoints. We use decision areas to see where price is going. And as you guys see, the market always seeks these areas before it does anything else. Right? It seeks out these areas right here. Boom. Seeked it out. Pumped like crazy, and then you dumped that right as you tapped it. And you consolidated a bit, and then you tapped it again, then you pumped. But before you could pump all the way up to all-time highs, right? Before you could tap all-time highs, you first made a crazy liquidity grab down here. Made a crazy liquidity grab. Come down, broke all of those just to tap the decision area, and then you could finally take out the all-time highs. Why is that? Because again, it's a checkpoint. Price needs to tap this area before choosing its direction. Right here, we see that we have an area where price makes a decision, right? So here you dumped, keep rejecting, and then you pump through it or dump through it, and you reject it again, rejected, and then you pump through it, and then you retest it, and then you pumped again, right? So here you have a decision area around this area. So what do? Well, you mark it up. Mark it up just like that. Around, let's see how many pips this is, 40, let's see, we want it around 50 pips decision, 50 pip decision area right there. And here we can see that now whenever price reaches this area, it either pumps or dumps, right? So right here you dumped, pumped, dumped, and they look small, but this is a 100 pip pump, right as you tap this area, you pumped for 100 pips, and then this is a fucking 350 pip rejection. So it looks small because we're so zoomed out, but these are actually really big pushes. And if you zoom out, let's see. Same thing. Tapped it, rejected, pumped, right? Tapped it, pumped. Tapped it, pumped. Here you had a rejection here, and then you had one fake out. Again, there's a margin of error to this, like with every strategy, nothing is 100%. But there will be a few times where you will get faked out, meaning it will neither dump or pump really, or it will reject, but it will not reject exactly at the decision area. It might come down a little lower, like for example here. So here you came through the decision area, but you didn't quite dump all the way. Now again, it is a 100 pip dump. Like, don't get me wrong, you could have caught this for sure. You could have caught this for sure and made some serious money, but it's not a crazy dump, right? So sometimes this happens, but that's okay. As long as 90 to 80% of the time it makes a hasty decision, that's fine. All right, so let's get into asset correlation real quick. So basically, if you guys didn't know, all the pairs that have USD in it are correlated with DXY. Now they're either positively correlated or negatively correlated, which means that either they move up when DXY moves up or they move down when DXY moves up. So in this case, we're going to examine gold. Just a quick side note. If you want to know how to identify if it's negatively correlated or positively correlated, all you need to do is just look. If the USD is the denominator, meaning if the USD is at the end of the pair, it means that it is inversely correlated. That means that if DXY moves up, this pair moves down, and vice versa. And if USD is in front, meaning let's say for example USD JPY, if USD is in the beginning, that means that it is positively correlated, meaning if the USD moves up, if the DXY moves up, USD JPY moves up as well. So they move together. So that's one easy way to know if they're negatively correlated or positively correlated. But now let's go over asset correlation. But now that's not necessarily what we're going to go over today. What we're going to go over today is how to see how inherently strong or weak gold is, and other pairs as well. You can add this to other pairs as well, but we'll specifically focus on gold today. So how do you know if gold is bearish or bullish for the day? How do you know if gold is inherently strong or weak? This is a very simple solution. All you have to do is you have to just see, since you know that DXY, if the DXY moves up, gold moves down, you just have to see by how much. That's all. You have to see by how much. If the DXY moves up a lot, but gold only moves up a little bit, that means that gold today is inherently strong. It means that gold wants to go up, right? Gold is strong. Like this this part right here, this is it's very strong. It's just that this is currently a little bit stronger, that's why it's still moving down. But that means that inversely, if you have a small dump down on DXY, a small push down, you will have a crazy push on gold. Do you guys understand that? Meaning if the DXY and gold, they're inversely correlated, so they should look like this, right? Boom, 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 boom. They should look like this, very equal, very balanced. But if the DXY looks like this and gold only follows up with a small dump, that means that when the DXY has a small dump, gold will have a crazy pump. You see? This is balanced, because you always want to balance each other out. That is asset correlation. Same thing with USD/JPY, for example. Let's take USD/JPY, for example, here. And let's say gold moves up a little bit, but USD/JPY moves up a shit ton. That means that right now USD/JPY is really strong, right? That means that if gold moves down a lot, USD/JPY will have a small push down. And then you will do this, and then USD/JPY will do even more. Will go even more. You see? So this is how you correlate the strength of the DXY to gold or GBP/USD or GBP/JPY or USD/JPY and different pairs. As you can see here, if we go to the example back at November 6th at around 10 a.m., you guys can see that we're the same place, we're the same time on both DXY and gold. November 6th at 10, November 6th at 10, right? And as you guys see, we are bearish on DXY. We are bearish on DXY, very bearish. You're coming down. It's big strong moves, but gold is barely budging. You see? Gold is barely budging. It's like almost consolidating a bit. This is the same time, by the way, 10, 10. Which means what? We now know that since DXY and gold are inversely correlated, when DXY moves down this much, gold should move up equally. But since gold is not moving up equally and is barely budging, it means that gold is very weak at the moment. DXY is making a big move down. Gold is barely moving up. Maybe even moving down a bit, but just look consolidating. That means that inversely, once the DXY moves a little bit up, gold will dump. All right, DXY moves up a little bit. You see, made a just retrace this move. Made an equally, like just make equal highs here. Retrace this move. Now gold technically should start coming down a little bit. At least retrace this move. What does a gold do? That's what gold does. Completely dumps. Now that's 14.45. It's 12. Let's see. Yeah, you see 14.45. So the DXY basically just retrace this move that it made and a little further, maybe, you know. So this is the move on DXY. Boom, boom. You see how this is a downwards move, then this is upwards move. So you see how the upward move is just a little bit bigger than the downwards move? Look at gold. This was the upwards move on gold, and this was the downward move. I think this day we even caught it play. This day we even caught it play live on stream. We saw that the DXY was moving down, but gold was barely budging. Gold should have moved up when DXY moved down, but gold wasn't. That means that gold was inherently weak, and it just needed a little push from DXY for gold to completely dump. So we just waited for that small push on DXY, and then we understood the assignment, we entered sells, and then we caught the move. And I think it kept dumping all day. This was at around 9. Okay, then it started consolidating a bit. But yeah, you guys see. You guys see the correlation, right? You guys see the correlation. So again, just to go over it quickly. If you have a pair where the dollar is the dominator, meaning the dollar is at the end of that pair. If the DXY moves up, that pair will move down, right? But if the DXY moves up and that pair moves just down a little bit, it means that when DXY moves, if the DXY moves up a lot and that pair moves down just a little bit, it means that when the DXY moves down a little bit, that pair will move up a lot. So if the DXY moves up a lot and gold is barely coming down, it means that DXY will just have to come down a little bit for gold to completely rip. Which means what? It means that gold that day is inherently strong and you should prioritize buys. And if the DXY moves down a lot and gold barely moves up, it means that DXY will barely have to move up for gold to completely dump. Which means that gold that day is inherently weak and you should prioritize sells. That is asset correlation for y'all. Alrighty boys, that was it for today's video. Crazy sauce drop. Make sure to add all of this information that I just relayed to you into your strategy and into your playbook, and you will thank me a lot in the future. It will save you so much money. If you guys want another video of me dropping sauce like this, next video that will drop will actually be crazy. So make sure to get 100 likes on this video. I want 100 fucking likes. I know it's gonna be hard, but I think we can do it. If you guys enjoyed the video, please leave a comment. Let me know what you think. Give me some questions. Call me a gay. Do whatever you want. All right, just leave a comment and like the video and subscribe, and I will drop more videos like this so you guys can become profitable traders. Also, if you didn't know, right now I have a bundle of my VIP, my full course, and my full playbook for only $79 a month. The playbook used to cost $400, now it's $79 a month. Crazy fucking sauce. I've turned people profitable in a month from buying that playbook. If you've already traded for some time, or you feel like you're a struggling trader, that playbook will absolutely fucking blow your mind and it will change your life. So make sure to get it, link in bio for that, and I will see you inside. But yeah, you know the deal, you know what to do. 100 likes on this video, get the playbook, and I will drop some more sauce on this YouTube channel. I love y'all boys, QTC on top, and I will see you on stream, on IG, or wherever the fuck you watch me. Peace out.